your say. We're on Twitter. Just use the hashtag there at the bottom of your screen. Let's get straight into it. Julia Lee, were the champagne corks being popped today around Bell Direct? Another high.
It was another high for the market. It's the highest that we've seen the market in terms of the intraday high as well as the closing high since June 2008. So a great day for the market, and really today was all about BHP Billiton. We saw a 21-point rise for the benchmark ASX 200 index, and about 10 of those points were due to the rise that we saw in BHP Billiton after the production update and the increase that we saw in the forecast for its full-year iron ore production. It's also right in the middle of AGM season, so we saw some impressive performances there as well. We saw SMS Management, Bradken, McMillan Shakespeare, Lendlease with its Investor Day, all having AGMs or Investor Days on the market, and these stocks all rising between 3.6 to 6% on the market today. So really seeing some outperformance from some of the commentary coming through from the annual general meetings, and also keeping a close eye on China. We were watching those property numbers coming out for the month of September. Once again, a strong rise. We've seen Beijing seeing property prices rising by 16% on year, Shanghai up by 17% on year, and this is something that we're going to continue to monitor because we know that the Chinese government is worried about bubbles. But all in all, a great day on the market. We also saw some highs for stocks trading on the market, including Mortgage Choice, FKP Property, Watpac, as well as Air New Zealand, just to name a few.
In your opinion, do you see that new money going in our markets?
Well, the banks do continue to be popular. We are coming up to reporting season, and don't forget we see 3 out of the big 4 banks paying dividends in the month of November. So we do tend to see a bit of support for the banks going into that dividend paying season. So we'll see ANZ, NAB as well as Westpac paying its dividend in November. And so that's people that are looking for income. I think the material space has been a clear standout since the 1st of July, where we did see iron ore prices really starting to take off after bottoming out for the year. We have seen those iron ore miners doing well. Stocks like BHP up by 20%, but Fortescue as well as Atlas Iron doing much better than that. And they're benefiting from a combination of record output as well as prices remaining relatively high. So we're just keeping a close eye on those iron ore prices because we know that more capacity is coming on stream. We know that BHP and Fortescue are adding about 40 million tonnes from around about this month. So we're going to see extra supply coming online, and just watching China closely to see whether we do see any curbs in terms of property, which still seems to be running pretty hot for China at the moment.
Korea, an outstanding performance in terms of the numbers we saw today, particularly the outlook for us.
Absolutely. I mean, we saw a record iron ore production result for the quarter as well as a record oil result. In terms of iron ore, we actually saw production up by a massive 23%. And so we saw full-year numbers also being raised up to 212 million tonnes, and that's up from 207 million tonnes previously. And in terms of oil production, once again, we saw a record there, 62.7 million barrels of oil equivalent. And that's really because of the US production that we've seen. We've seen Black Hawk increasing production, and we've also seen a new well at Atlantic, which has helped out. So BHP really coming out with a good result there. I guess the only thing with BHP is we're just sort of watching the pricing because we are still anticipating that extra capacity that I mentioned, as well as China moves, because we know that the numbers have been quite good, and we know that China does want to stop the bubbles from happening, especially in that property space. So with the property prices for September once again coming in with a strong increase, that's something we're watching very carefully. I guess in this point of the cycle, this is a point of the cycle where the market's now pricing in earnings growth, so it is very difficult to find value. And I guess when we have a look at the cycle and different strategies which tend to work well at different parts of the cycle, this is the part where we do start to see the small cap index outperforming and more of a momentum play. And whether that's earnings momentum or growth momentum, it's probably easier to find price growth momentum rather than earnings momentum right now.